appraisals. This is what she does. So we'll start with a little story. You can't see that very well, can you? Someone who had principles class remembers this story a little bit. I think it's instructive as far as it relates to appraisers and appraisals. So this is a house that was originally built around 1900. It has been added on to several times. This is where my mom lives. And so she, in the downturn, 2000, well, right before the downturn, so the market was hot. She got into a bad deal with a guy who was giving her a loan on this property. And it was one that had an interest rate of like a base, I can't remember exactly where it was, but a base of like 6%. That's a base. And a ceiling of like 10%. So this is not 1979. You know, this is 2007 where interest rates were pretty good, right? So she got into this bad deal, and over time, the market tanked. And she needed funds, and she was in a situation where this was causing a financial burden. And so I met with her and I thought, well, how do we address this? How do we, fix the issue? So how do you fix an issue when you have a loan that's bad? You refinance it, right? You get another loan to take out that loan. What do you have to do to get that loan? What does it have to be worth?
Whatever the lien is.
So whatever the lien, which would be a mortgage in this case, plus what?
Interest.
You have an equity, right? A loan-to-value ratio we've talked about. So you have to have some amount of value on the home to get the loan. So if the current mortgage is worth more than the home itself, can you refinance? Not really, you really can't, because they're not gonna take out a loan and still owe money on the house, right? So that was the issue. And then it goes along for a period of time, so you're like 2000, I can't remember the exact time period, but say 2012, market's now picked up, it's starting to do better, so her value is increased, so now maybe the value's high enough over what the mortgage was. So we decided to get an appraisal. Actually, we decided to go talk to the bank. Because the market did what it did, the appraisal industry retracted and said, the banks retracted and said, you can't just get an appraisal. We've got to do the appraisal. It's got to be a third party. You can't have a connection. We're not going to have a connection. It's got to be completely separate, arm's length transaction. So we couldn't go get an appraisal and then negotiate the comparable sales within that appraisal. It had to be someone totally separate we didn't know, and then just hope that it was right. So we got we went to the bank ordered an appraisal, and it came back, and we had talked to the guy. During the downturn, this home had 1900s, didn't really have a basement. This was in Utah. In Utah, it's popular to have basements because people need to go down further because of freeze issues with the ground. So during my high school, after high school era, we dug out the basement. So it's 5 bucket gallons of dirt. You dig and then walk them up. This was hard labor for my dad to try and help us grow up. So we would literally put dirt in these buckets, and you'd walk them up the stairs, out the house, pour it on the ground, and then go back in. We did this to clear the whole basement. That was our basement. Well, the basement wasn't finished too well, and I was concerned that there were issues that would maybe cause the foundation to break, because we hadn't fixed the foundation. We just dug out dirt. So we fixed the foundation and we fixed rooms and we put a bedroom in there. And if you have a bedroom, you've got to have egress for fire, right? So we put a window in there, and so it was a great bedroom, added value to the house. Now it had 4 bedrooms. Well, the appraiser comes over and he looks at it and he says this doesn't qualify as a bedroom. Why? Because there's no closet. And I had missed that, so we hadn't built a closet in. And so that was a problem, right? That's a huge hit. So 3 to 4 bedrooms is a big value difference. So he came back with the appraiser and appraisal, and it was low. So we spent $300 for an appraisal, and it was low. And so then you'd be able to, do we take the risk again and roll the dice for $300 or wait? So we waited a couple years, or a year even, and then decided this is too onerous of a financial burden, we have to get this fixed. So we, the market had started going up, we got another appraisal. Well, this appraiser was an old guy. The other one was younger. This is an old guy. He liked old homes. So he comes in and he loved the house. Thought this is great. And so we asked, well, what about the bedroom? Like, is the fact that there's no closet here going to be an issue? His response, no. This was built like in the 1900s. They didn't have closets. They just had like old wardrobes. It's a bedroom. So he called it a bedroom. And we got the appraisal back, and lo and behold, miracle of miracles, it was just enough. And it was the value that Qual gave her a loan-to-value ratio to cover the mortgage, to give her enough equity that she didn't have to pay for mortgage insurance, and refinance the loan. So it was totally dependent. The market had gone up a little bit, but not as much as, there was like the first one came in at I can't remember now, it's been too long, like 210. The second one came in at 240, because this old guy liked the house. So that gives you some sense for appraisals. I don't mean to say appraisers aren't good. They have to go through much more rigorous schooling and education than a real estate agent, real estate broker has to go through. It's harder. But when it all comes down to it, there's a subjectivity to these things that you have to be aware of accordingly.